Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter. And this is Saturday, November 11th, 2023. And remember, folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, wow, we finished the week with a giant thrust to the upside, and the NASDAQ closed Friday up over 2% for just the day. Unbelievable rally as interest rates declined after rising on Thursday when the bond auction showed less than enthusiastic demand, but Friday turned everything back up to normal. We like up as being normal. And our weekly stock analysis video, well, Novo Nordisk is an amazing stock that is shocking everyone. It's ready to take a place in at least one of our portfolios. It's up 63% so far this year, and it's coming out with several weight loss drugs, as well as the insulin drug that has put it firmly in the top of our drug stocks. And our ETF video, folks, our top stock picks in the NASDAQ are up 78.8% this year. If you were hedged, you would be up 37% this year without the volatility of the NASDAQ 100 index. Folks, you've got to see this video. And let us look at the market, and this is the S&P 500. The top red band and the bottom red band are volatility bands, and the market stays between those bands about 99% of the time. When it goes outside those bands, it's a strong thrust in that direction. But right now, with the center line being the 20-day moving average, we can see that this week this market has taken off. Here's Thursday, where the market declined as interest rates rose, and then all of a sudden Friday turned things around as the market digested what Fed Chief Powell said on Thursday, and also the bond auction that took place, the Treasury bond auction that took place on Thursday. So, folks, where are we going? Yeah, probably to that top band right there. And down here, our intermediate term signal is doing just fine. It is just rocking right along, and now it is at that zero line, which means it is now into positive territory, which is even better. So, folks, don't forget, it is above this line back here. So even though the market, let's go back up here, even though the market just now topped this last recent high, the intermediate term indicator is higher than that last recent high, which means a strong market, or at least stronger than it was back here. And remember, the semiconductors of the NASDAQ up over 2% on Friday. The semiconductors are leading the way, and it's pulling the entire market up. Semiconductors being very, very popular, and back orders for them means the economies are expanding, even though it is slowing down a bit in purchases, retail purchases really, but the technical part of the market is doing just fine, thank you. And let us look at the S&P 500. Once again, let's look at this little signal up here. Now, first of all, down here, the market has reached a higher high. But up here, this latest thrust up on Friday reached a lower high. We have to wait until Monday or Tuesday to see if this line comes down and we get a downward divergence. And this will be short term, because these moves are short term. Sometimes they turn into, well, you need a short term reversal in order to have it be a eventual long term reversal, but it doesn't always happen. These are short term reversals, which could turn into longer term, but we have to wait till Monday or Tuesday to see if this line turns down or if it goes back up to this high once again. So that's what we're looking for, folks. We love this market, and this blue line down here is the 50-day moving average. Red line is the 200-day moving average, and you can see the S&P has been testing this 50-day moving average, but boy, oh boy, on Friday, it just took off like a rocket. And again, here's our intermediate term signal, and you can see it is now above this zero line. So we like to see that. And when we look at the QQQs are what? The NASDAQ 100 stocks minus financial stocks. So it's the largest capitalization weighted stocks in the NASDAQ. There's 100 of them, minus the financial stocks, and we can see the exact same pattern with this shorter term indicator, exact same pattern all the way down here with the intermediate term indicator, and again the blue line 50-day moving average. And I'll tell you what, this the NASDAQ 100 is not even looking back at this 50-day moving average, at least not right now. And you can see where we're going. We're going to go right up, and we're going to test this recent high. And folks, if it surpasses that, then we're looking at this high over here. So we could be in for a nice rally, a nice Santa Claus rally, holiday rally, whatever you want to call it. We get this rally into the end of the year, which is usually pretty good. And don't forget, we're going into an election year. And during an election year, everybody spends like crazy on advertising, picks up the economy, and each party wants to say that we're giving the most to the people. And, well, you know the rhetoric. I don't have to go into it. So usually the year of a presidential election has proven to be a very good year. So we're looking good in here. Yeah, we'll have our backs and fills and all of that. But overall, I think we're going to see this indicator down here go as high as it was way back when over here. So we're looking at a pretty strong market, at least stronger than the last time we were here. Notice the market has made a higher high from this period here, and our indicator is confirming that because it's higher than it was right back in here. Things are looking good, folks. And portfolio protection, those of you who want portfolio protection all the time, we still have our November, December, and January puts, about $135,000 portfolio here, and we have 3 SPY puts. SPYs are 1/10 of the S&P 500 index. So for smaller portfolios, the SPYs are just great. Now, here's something that if you are not subscribe to our letter, or if you are just looking at the weekend letters, what you don't see are our daily letters, where right here we give our short-term signals here, and that's the topping that we've been talking about now, and we'll know on Monday or Tuesday whether these have topped. These are the short-term indicators on the Dow, S&P, and the NASDAQ 100. Now, the intermediate term indicators that I'm showing that are at the bottom of the charts, they are all pointing up. Now, if you are timing your hedges, we took the hedges off about, 9 days ago, because we got a signal that the market, the intermediate term indicator, is pointing up. Those of you who are always hedged, have your hedges on, you forget about them, and you don't worry about it. Those of you who are timing the hedges are off right now. So this is what you get in the daily letter that you don't see on the weekend letters, folks. So just go, and if you're not subscribed, go to the 2-week free subscription, and you'll get that as long as you haven't subscribed before to the free 2-week subscription, and sign up, and you'll see these indicators every day in our daily letter. So meanwhile, if you're timing your hedges, the hedges are off. If you're always hedged, the hedges are on. You just leave them on and you go to the beach and forget about it, folks. Because don't forget, our hedged portfolio for our ETFs are up more than the S&P 500 by taking just a fraction of the risk of the S&P 500. So, folks, we're doing very, very good with those ETFs and the hedging. And these are the hedges that are on all the time on our ETFs. You don't have to have them on all the time, but if you do, you're still outperforming the market by taking a fraction of the risk. So, folks, we had quite a week this week, and again, second week in a row, we've been doing just wonderful. And this is the sunrise on the Atlantic Ocean on a nice, calm day. So, folks, go out this weekend, forget about the market, be with your family, go out, go for walks, go for jogs, just enjoy the weekend, forget about the market, because guess what? We'll be right back here with you on Monday morning. All right, folks, stay safe. See you next time.